Holy smokes, everyone. It's time to finally do another update on the situation that's happening in Australia because something big just happened today. Home prices in Australia have just fallen for their first time in 2 years. And this crazy housing bubble that's going on in Australia, with Sydney being the second most expensive housing market in the world, is finally starting to deflate. Or should I say, the bubble's finally starting to deflate. Because that's right, Sydney is more expensive than many major capital cities in Canada. It's more expensive than New York, LA, London, Paris. Not only that, but at the same time, Australia's currency, the AUD, is tanking and it's heading into 50 cent territory or sub 60 cent territory, and it's creating a perfect storm for the Australian economy. So, from my Australian views, Ian Yowen, and it's time to give a very important update. Well, look at this, everyone. House prices are falling for the first time in nearly 2 years. So we got the latest core logic data, and I'll go over what are the winners and what are the losers, what areas are falling the most, and what areas are still growing, because just like any housing market in any country, there's markets within markets. And then I'll go over the Australian dollar and just how impossible it's becoming to survive in Australia. So the 0.1% decline in the month was powered by significantly larger drops in the two big markets, Sydney and Melbourne. And the falls pushed the median price in Victoria capital to under $775,000, an annual decline of 3%. But people, I think this is going to be a start of a new trend, because house prices don't go from booming 10 to 20% to dropping 10 to 20%. Slowly the price growth will slow down, as what we've seen. Then they'll slowly start to fall, like these small falls we're seeing now, but much bigger in Melbourne, Sydney. And then they'll start to accelerate as fear comes into the market. So CoreLogic Research Director Tim Lawless said he expected prices to continue falling in larger cities until interest rates started to fall, as affordability issues kept buyers away despite more housing supply. So that's right, housing supply is increasing. But I'll go over in a moment why the RBA may not be able to drop interest rates. And experts have commented that housing prices, or the housing market, is finally starting to catch up with reality, because again, they did get so out of whack. And again, everyone's hoping that the RBA will be able to cut interest rates to save the housing market, but with inflation surging and with the Australian dollar crashing, and I'll get more into that in a moment, they won't be able to do that. So okay, we have the charts here of what markets are falling the most. So we can see here, Melbourne, Denistan territory. We can see since COVID, pretty much everyone fled Melbourne and Victoria. They're so indebted. Taxes are going up through the roof in Victoria. It's the worst indebted state in many countries when you compare their debt to GDP for the state. And it's pretty much become the California of Australia. We can see Sydney is starting to accelerate the declines, and that's very big because Sydney is the biggest market or housing market in Australia, so that has big consequences. Hobart down 0.5%, Canberra down 0.5%, but we do have some areas that are still growing pretty strongly, but I think they'll start to reverse soon. So Darwin up 0.4%, Brisbane up 0.5%, Adelaide up 0.6%, and Perth up 0.7%. And look at this, Melbourne is becoming one of the cheapest capital cities in Australia now. He continued to say that Sydney's listings are tracking up 9% higher than they were a year ago, and they're about 10% above the 5-year average, which is now a bit higher than Melbourne. So Sydney will probably follow a fairly similar trajectory to Melbourne, or what Melbourne went through. So that's right, we can see inventory is starting to pile up. Interest rates are going up. A lot of these people that had fixed rate mortgages, a lot of the people that didn't pay their mortgage during COVID, they're now having to pay, and they're now getting forced to sell from the banks, because we all knew that it wouldn't have that 2-year period, then there'll be a huge mortgage cliff and they'll tell them to sell straight away. It's a couple-year process for it to play out. And Shane Oliver goes on to say it's poor affordability that will limit price growth over the next year. Now you may think, well, what about immigration? Well, immigration, I think, has peaked now. I think the net immigration next year will be low because we had a big boom after COVID, but now immigration has become a big political issue. So they're going to start reducing immigration, which will be less demand for housing. It's still too much immigration, but it won't be as much as we've seen over the past couple of years. He said historically there's been more significant improvement in affordability before you get a decent property upswing. But the next upturn will start with constrained affordability. So while rate cut will limit the downside in the near term, the upside might also be limited, which I completely agree with. More experts say that high interest rates were really starting to hit households, and I completely agree. People can't even qualify for a mortgage with these interest rates, which I'll show you in a moment. More people are choosing to put their property on the market, but there are also fewer buyers out there because they're sidelined by lower borrowing capacity. So listings are starting to build up. And I went and did a quick calculation to see what the average Australian couple can afford right now, what their borrowing capacity is, and they pretty much can't afford any capital city. So look at this. Say there's two people qualifying for loan. Let's be generous and say they have no kids, but many couples will have kids. Let's say one makes 75,000 and one makes 60,000. So this is around the median income. Some earn more, some earn less, but this is around the median. Say they've got about $4,000 worth of living expenses. They've got maybe $500 in some other loans or credit cards, limit of $10,000. The average, couple in Australia can only borrow $500,000. And like what we're seeing here, many capital cities, they're pretty much all over or around 800,000, with Sydney at 1.2 million. So there's no Australian couples or average Australian couples that can afford a house anymore. A lot of young people have just simply given up altogether on being able to afford a home. And eventually reality has to hit and people have to realize this is not normal. This is not the historic norm. This is the biggest bubble in history. They say once interest rates come down, buyers will quickly snap back into the market, but that may not happen. Auction clearance rates have been falling steadily across Sydney in the past months, which are early signs of a falling market, and all signs are pointing to weaker market until the middle of the year. Well, what happens if we fall into an official recession? Right now, we're in the longest recession per capita since the 1990s. So simply, you think 1 or 2 interest rate drops are going to happen, and then all of a sudden people can borrow $1 million. No, it's not going to happen. Their borrowing capacity will probably go from 500,000 maybe to 550 or 600 at most. It's not just all of a sudden going to be a stampede of people running to buy a house with basis points dropping 0.5%. The report goes on to say we're hearing anecdotally from agents that homes aren't selling as quickly and there are fewer people at open homes and less appetite from investors. It's because rentals are becoming a big political issue. So investors aren't feeling that confident because the government can come in and change the rules overnight, like what they did in Victoria, and all of a sudden their investment is now losing the money. It looks like this significant run of growth is starting to wind down. Well, I think we can all agree it is winding down. And here's why the RBA may be completely stuck. Because look at this. The Australian dollar could be heading to a 20-year low on risk of China, Trump, and slow growth. So the only reason why Australia didn't fall into a recession in 2008 was because of China. But China, the second biggest economy in the world, has deflation at the moment. Their economy is much weaker than they're reporting. And Donald Trump is about to come in and put heaps of tariffs on China, which is going to slow their growth, which will slow our growth. On top of that, if Australia falls into recession, we've still got high inflation. The RBA simply may not be able to continue to drop interest rates as aggressive as people in the housing market want, because if they do, the Australian dollar will drop to 50 cents and inflation will surge much higher. So to the extent the recent moves are a reflection of just how strong the US dollar is at the moment, but we're also sliding against other major currencies like the pound and the euro as a raft of negatives pile up against us. A weak Chinese economy, America's threat to impose punishing trade tariffs, a poor medium to longer term outlook for key exports, and a sluggish economy are likely to keep the Australian dollar under pressure through 2025 and threatening to send it into the 50 cents territory. And for many Australians that may not know, we have one of the least complex economies in the world. There are countries in Africa that have more economic complexity than us. We're not even in the top 100. We also don't even have any companies besides the Commonwealth Bank of Australia, which is ranked 92nd for market cap in the world. Besides that, we don't have any companies in the top 100. There are many other countries that have worse GDPs than us that have better valuable companies. We're not a big entrepreneurial country. We focus on just a few things. We focus on housing, making it so people can't even afford a house. We've turned housing into rampant speculation, mining, exporting stuff to China and selling off our resources to other countries, and immigration, and more specifically international education through universities, people coming here to study and then working for very low wages. Besides that, we don't have much else going for us. So if that does transpire, it will be the weakest we've seen the Aussie battler in more than 20 years, back to 2003. That was when the dot-com boom had gone belly up and Australia was seen as a relic from a bygone era, doing nothing more than digging up dirt and shipping it offshore, which is kind of what we're still doing. Now, the Australian dollar is one of the world's most actively traded currencies, and it's one of the most volatile. We may not be one of the world's biggest economies, but we are a major trading nation, exporting vast amounts of agricultural produce, minerals, and energy. And then there's our connection to China. Because it dominates our trade to such a huge extent, it has made the Australian dollar a proxy for anyone wanting to speculate on the health of China's economy. And that's what's created these wild swings, like what we saw in 2000 when the Australian dollar fell below 50 cents, or in 16th of March 2001 to be exact, for the first time. And people, if things don't play out good, we could be heading back there. Now, during periods of global crises, such as the global financial crisis and the pandemic, it quickly takes a massive hit, helping to insulate the domestic economy from whatever else is happening around the world. That then eases pressure on the Reserve Bank of Australia, the RBA, and the federal government to take emergency action and deliver some breathing space. But extended periods at the extremes can be damaging. A weaker currency fires up inflation because most imports become more expensive. And this is why I think the RBA is going to be trapped and not be able to cut rates as much as they want to. Because if they do, the Australian dollar will fall and inflation will resurge. Now, for more than 20 years, America routinely has declared China a currency cheat and been critical of Japan and admonished Europe over the exchange rate manipulation, and all that with a straight face, as it has engaged in one of the biggest money printing exercises in history, which has been designed in part to weaken the greenback. At various times, we've been caught in the middle of those currency wars. The Aussie dollar may be heavily traded currency, but our economy is nowhere near the size of America, China, Japan, or Europe, giving us little firepower to take on others in art of manipulation. So I know what you're thinking, well, okay, where to now for the Aussie dollar? Well, there's an argument that our currency has been oversold, and that might be legitimate in the short term, but looking at longer term timeframes, it's likely it will remain under pressure, partly because our over-reliance on one major economy has come back to bite us, and I think we can all agree. China's incredible growth is fueled by a combination of government-directed investment in infrastructure, manufacturing, exports, and by taking advantage of trade law loopholes that delivered it to developing nation status. But the most remarkable transformation in history has accompanied by serious growing pains, which has collided with structural and demographic problems that have created headaches for Beijing. A series of investment bubbles, like what we're seeing with their real estate market, ballooning debt levels, and an aging and shrinking population has sent the economy spiraling into its fourth year of problems as deflation kills investment and strangles consumption. So that's right, things aren't looking good for China at all, and that's definitely going to affect us here in Australia. Now, add a potential trade war into the equation of the US isolates itself behind tariff wars and heightened prospect of global conflict on multiple fronts, and you have a formula what promises to be almost unprecedented volatility. So everyone, I know you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? What this means is this Australian housing market bubble that feels like there's no end in sight, that seems like there's no hope in sight, there is hope. This is very, very abnormal what's happening to Australian house prices. I think we will see a big correction this year in 2025. I don't think the RBA is going to be able to drop interest rates like everyone's speculating they're going to do because the Aussie dollar is under attack. I think we could very easily fall into recession in 2025 unless the government pulls off an economic miracle. But what do all of you guys think? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.